All right, week 17, outlook number 2. It's a bit later than usual, had to stay late at the office, but let's go ahead and get into it, starting with the British pound futures. From the 4 hour perspective, we are still oscillating just outside of the 4 hour price gap that I'm looking for. What's interesting is that we're essentially building a lot of highs here and a lot of lows, but more importantly, we're building highs that are, you see, they're pressing towards a certain area, which is kind of the area that I have marked. We'll see if that actually plays out. But that's just a lot of liquidity being generated. And on top of that, want to notice why we're getting a lot of sensitivity to this is because if we look at the median or equilibrium point of this 4 hour range that we're in, or this macro range that we're in, this makes a lot of sense. Like similar to here, similar to how we got taps here, but this is very in family with the price action that we saw earlier going over here. But this was a part of the run, but it goes to show that this is very much equilibrium of the range where we're getting a lot of sensitivity to a lot of things. All right, so what we're waiting on is more price action. This really isn't tradable right now. I would not trade it. I'm waiting for the area of interest, or specifically the sponsored candle of interest that I want to play off of for sells. Sticking to the subconscious or the basically the macro bias subconsciously is a bearish bias because we're in a bearish range. So I'm looking for bearish plays. All right, moving on to gold. Same thing, nothing there. The NASDAQ. So it decided to draw liquidity and then move higher. So it did give the liquidity draw, and then it did give a response to run lower after we ran the high a second time. But immediately after we ran this high, which is our first liquidity draw, we then performed another liquidity draw after on the low here that that caused the liquidity draw of this high here. So effectively, we have definitely entered into a bullish run. So after we broke this high, we're now transition states from a bullish range to a bullish run again. So we have a high, effectively a low. This low created that new high. This high created this low. This low performed a liquidity draw on the previous low here, and then that's what led to this price action here. And then immediately we see that this little run here, or this impulse, is completely balanced. So I wouldn't be too surprised if this continues to move higher. We'll have to wait for see if there is bearish price action to take out this low, unless a new low is formed or a new basically little leg is formed. But as of right now, we're in a bullish run, and because there's no opportunities here or no areas of interest on the 4 hour, I'm just going to sit on the sidelines until we get some more structural action. Okay. For the Dow Jones, we are climbing. So like I said, we would be looking for price to run towards this high. It seems that we're inching ever so closely to it. I wouldn't be surprised if it happens over the next 2 days. And it's just based off of how to read the price action. To be completely honest, it's just the structural actions that occur. We took out this high, we took out this high, and there's no areas of interest in here. So if there is any liquidity that will stop this bullish run or dampen this bullish impulse here, it's going to be at this high, and that seems to be where price is looking to move towards. We're basically just moving higher into the premium. And we're looking for deeper liquidity pools in order to move lower. Now, similar to the NASDAQ, or actually, sorry, different from the NASDAQ, this is a bearish range. So we should be subconsciously looking for continuation of a bearish bias, most likely, but it's yet to be seen. And the reason why I say that is because we had the bullish run here, then we had a bullish range existing from this green box here to this green high, and then once we broke structure of that green, that transitioned us from a bearish range, a bullish range, which existing from this green to that green, and then after we broke structure or broke this low, that led us into a bearish run, and then after we broke this high, that transitioned us right immediately back into a bearish range. And so now we're in a bearish range, and we're looking for liquidity draw, most likely, or price action that gives us clear direction on which way it's going to run next. All right. And then oil, yep. Oh, okay, we got some action on oil. So yeah, it seems that we have just liquidity draws after liquidity draws after liquidity draws, which makes sense. The latest liquidity draw is here on oil. And so if this liquidity draw holds, and as it seems to be, we're taking out highs. So the next high that we're looking to target, I don't even know where this thing came from. The next high that we'd be looking to target would be this one for sure. Let me go and zoom in. Because we are still in this range or whatever. So we should be looking for this target, and if we break structure, we aim for the next target, and so on and so forth. But ultimately, like I said the last time, I think that we dove into the detailed analysis for oil. I forget what outlook that was, but we effectively have relatively equal highs. And so because of that, this is just a clear target to mitigate or to liquidate a lot of, well, liquidity. So we're going to be looking for that here. Yeah, if you're in the discount side, this is a nice bullish play opportunity that you can play. And then, you know, go from there. Be careful. All right, and then for the live cattle futures, we're pulling back ever so slightly. I wonder if cattle are dying or if they're multiplying. I don't know. The rates are interesting because what would it be if the price of cattle is going up? It means they're getting more expensive, which potentially means there's less cattle, or less processing. I don't know, whatever. All I know is cattle's still doing okay. All right, peace.